Richard Geller here. So the Obama loan mod packages come out, and I think there's some very interesting and some very exciting pieces of this thing if you're looking at loan mods for yourself or you're looking to do loan mods for profit. So let's take a quick look at what I'm talking about here. First of all, who qualifies? You only qualify if you have an owner-occupied house or condo. Your loan was made before 2009, and only Freddie Mac and Fannie Mae loans are covered right now. Okay, that doesn't mean that other lenders aren't going to get on the bandwagon. I think they will, but right now it only covers those. Still, that's at least 50% of the mortgage loans right now, so it's huge. Big surprise for some of us is that the debt to income ratio, DTI, is important. Okay, that's the debt to income ratio, which is figured out according to them by just adding up anything to do with your mortgage. That means your mortgage payment, taxes, insurance, homeowners fees, everything to do with that mortgage payment, and it's only on the first mortgage payment. And then the loan is modified so that a new payment lets you reach 38% maximum debt to income all the way down to 31%. So what that means is that no more than 38% of your income is going to be taken up by your mortgage and the related payments to your mortgage, and as little as 31% of your income. Now, this is gross income, and it's also just talking about the debt associated with your mortgage and the things like taxes. So it's not talking about your credit card payments, your car loan, or things like that. So here's how the loans are modified. There's a 90-day trial period, and then the whole mod period lasts for 5 years. So they will modify your loan, and then if everything goes well for 90 days, it's made permanent, and the total duration is 5 years. Any amounts that you owe on the loan mod, like any amounts like interest charges are unpaid, payments you haven't made, other charges are basically just put into the principal and added to the loan. So they don't ask you to come up with any money. And they will lower your interest rate in order to get your payment down to a maximum floor. I mean, the lowest it can go is 2%. And then they'll lengthen the term of the loan up to 40 years to get that debt to income ratio down to that number we were talking about, remember? That's how it kind of works. The payments are lowered so that you'll reach a 38% debt to income ratio, and then it goes down to as little as 31%. The lender pays half of that, and the government pays half of the difference from 38 to 31%. So the government is matching basically the lender dollar for dollar to get your payments as low as 31% of debt to income ratio. Again, remember, debt to income ratio, according to this definition, is just all the expenses related to your first mortgage, including property tax and insurance. It's not all your other bills. Big surprise here, and this is really the thing if you're interested in doing the loan mod business or you're in the loan mod business. This involves huge cash payments to the lenders. Huge cash payments, thousands of dollars to the lenders, many thousands of dollars to the lenders for doing loan mods. The servicers are getting big cash payments. So they are incentivized big time to do loan mods. This is a huge plus for people in the loan mod business because your partners in this, the lenders, are getting big bucks. This is what has been missing all along in this business. So it's very, very big. I know you're going to have lots of questions like, what about self-employed borrowers? Does this work for investor-owned properties? What if you have liquid assets or your client has liquid assets that they don't want the lender or the government to go after? What if the client or you defaults during a mod? So this coming Monday, 9 p.m. Eastern Time, we are going to have a teleseminar, and we're going to go into real specifics and how to make money doing loan mods in the new environment, because this is very, very big. Now, if you're not seeing this on my website, go to getloanmodsecrets.org and register for the call. Getloanmodsecrets.org. And if you are on my list already, you're going to get an invitation via email. This is going to be a huge teleseminar we're doing Monday, and it'll be designed for people who are in the loan mod business, thinking of getting in the loan mod business, or homeowners interested in loan mods. So Richard Geller, and we'll talk to you soon. Thank you. Bye-bye.